Morning, everybody. Happy Friday to you. Dan, Matt, Rusty. Got a special
Morning.
guest, Rusty, today.
Yeah.
Good morning.
You guys doing okay this Friday?
Doing well. This is the start of a lot of basketball going on in the
Oh man, yeah, go Vols. The
Go Vi-
fake,
Go-
the fake orange versus the real orange play today.
That's right.
Texas versus UT.
Oh, that's right. That's right.
Yeah. So Cooper Flag's hurt. A lot of, I mean, really, we could turn this into a basketball show, but let's not do that. Let's get into
Let's
some
see,
intro.
though. Listen, we can all talk about our hope, right? That the
Yeah.
UT finally makes the Final Four for the first time in program history, I believe.
Yes,
So,
this is
that's
their
the dream.
due.
Yeah, they're due.
I'll always take Elite Eight, but before we do that, let's just
Low
talk.
standards.
Yeah.
Well,
Low standards.
speaking of low standards,
Every
Speaking of
morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron, mass back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Option Omega, you're traded home, where every move makes you feel less alone. Makes you feel less alone.
Troy, I'm speechless every time I see that. You know what I'm gonna do today? I'm gonna go to the hardware store, see if I can get some of those big, thick ropes. I'm gonna start that. I
That's
like
right.
that with those guys. That's quite
that's
I've
a
seen
workout.
that
Yeah.
That is. I've seen that at the club a couple of times. I'm not sure I could do it, but it looks interesting.
Can you
appreciate that.
Photoshop me in there as just like the coal
Yes.
miner?
Yes.
Like covered in
For
sweat
sure,
with a
it's
helmet
coming.
on. Like, don't mind me. I'm not really, I don't belong, but I'm writing code.
I'm gonna make.
Right.
This is my dream. I mean, it's a Friday, so laid back a little bit. Let me just tell you my vision for this. You remember those Full House, any TGIF, any sitcom, on TV worth its salt. You would have these. This is how they do it. They'd be playing music, and as they're doing the intro, it'd be like Kelsey Grammer, Cheers, and this is the video of it. He'd be like, and what I want a 7 to 8 minute video of just all of us doing that in various positions,
Poses.
except for Rusty. Rusty's working in a coal mine, and he asks for bread, and it's all three of us just being like,
I
with
like
a whip or whatever.
I like where you're going.
Yeah.
Yeah.
So
Now, would you have the same music if you did that? Would you change?
I'd
the
make
music?
different. I'd make different music.
Yeah.
I'd make it
Like the
I'd make
Mordor
it-
music or something? Yeah.
I'd make it as cheesy. No, I'd want it to be as cheesy, but I'd want the lyrics to be like, he's our worker man. He can't eat until he finishes tasks for the day, and stuff like that. All right.
Matt,
So
he's out of control. He's out of control.
yeah. All right. So here we go. Big news today, and then we'll get into some trading stuff. So, first off, two things on the rundown this morning. We got pancakes. So there is apparently there's this place, and you have to look at it. It's Europe, I think. I mean, and I think it's the UK, and they race with while frying pancakes, and that got me thinking. There's really two types of people in the world. There's pancake people and there's waffle people. And I needed to know this morning who I'm standing with here. If that makes sense. Are you guys pancake guys or are you guys waffle guys?
I'll go
You have
first because
one-
I have strong feelings. I'm a pancake person unless it's Belgian waffles. and then I'm a waffle person.
Okay. Belgian waffle. Okay. Okay. Rusty, pancake.
Good question. Option C. So my pancreas is dead, and I eat neither of these things. So there you go. There's your coal miner answer. I'm not allowed to eat these things.
Well, if you finished your work, you could, but that's a separate thing.
I'm
We'll
trying.
talk off the air.
I
talk
gotta shovel some more first.
Yeah.
Troy, is it
Dan,
okay to do it? Is it okay to say, I'd like the gluttonous, I'd like a combo? I mean, they're both very, very superb items.
Yeah.
I think I could go with a good waffle is, because usually you don't see waffles as much, at least I don't, on the menu. See, but when I think of waffles and pancakes, I also think of a institution in the South, which I always, in Chicago, it was like if you wanted the cheapest breakfast, you'd go to Denny's for $1.99 or something, and you could get all you can eat, and then you'd supper for 2 days. Here, it's Waffle House is just, it's a Southern institution. Wouldn't you say, Waffle? Everybody, and no matter what time of the day, there's pretty good business in there. Are you guys Waffle House aficionados?
It's an institution up through the Midwest as well. And
I love Waffle House.
I don't know if you guys are aware of the whole Waffle House is the true barometer for the severity of emergencies. But there's this whole idea that Waffle House's availability, when they close Waffle Houses, it's getting serious with an emergency in the Midwest, South, Southeast. Yeah, because they're like the Postal Service. They're maybe more reliable than the Postal Service. I don't know. They're just open all the time.
It's also a true gauge of inflation, right? To go to tie this into the market talk, like, if Waffle House gets pricey, then we have a problem. Houston, we have a problem here.
So when they raise the egg price now, like at the breakfast place, Sammy's in Knoxville, when I went there the other day, it's like, sir, is it okay? We have we have to raise the egg prices. I'm saying that's okay. What are you gonna do?
Yeah. No, I mean, for those keeping score at home, the answer is pancake. But waffle.
The answer is pancake.
Waffles. I do love waffles. If I'm eating it at the house, I'll eat a waffle all day because I feel like I can control the syrup packet there. If I'm at a restaurant, they are so usually like a Cracker Barrel or something like that. They're so they've drenched it so much in butter that syrup is just dipping in. And then the secret with the pancake is you have to stab it for the syrup to find its home. So anyway, well, we could talk 30, 40 more minutes about this. This is obviously one of the bigger things, but let's keep going.
Yeah.
Fellas, is the bottom end?
Oof.
I saw a guy on CNBC yesterday about 4:30, and he said, bottom's in.
I'm with him. I'm going to go with the bottom end, just because I'm usually wrong on my predictions. So go the other way of what I say. But the only thing yesterday that really kind of I was focused on is, think of yesterday. Even though we were down a lot, VIX is basically saying, I don't really care. You know what? I get it. The tariff, you've yelled. It's like the kid complaining. Finally, the mother just, okay, your toe's broken. You said that before, you're on your own. I mean, VIX did not. When you look at how low we were yesterday, and VIX is in the 24s. I mean, whereas we were higher in the SPX earlier in the week, and VIX was net 29 or so. So I thought that was, to me, even though we were going down yesterday and flirting with the 5,500 number, I just thought VIX was just like, I don't feel it. And I think if you look from that perspective, I think the bottom, and I agree with it short term, but I mean, things can change real quick. But Matt, Rusty, what do you guys? If you're smart, you'll fade Troy and
I will say maybe a short-term bottom. I'm just not convinced, right, that there's the systemic risk is off the table. I got into this whole business because of Nicholas Nassim Taleb, and it feels like everything is so overly fragile in terms of, I mean, everyone freaks out about a few small, I mean, really, in the grand scheme of things, a few small tariffs, or like every little thing that happens, the yen carry thing, or the whatever it was last year. I mean, like tiny little things, and none of these have been a big deal. And so it just makes me wonder if this trade war escalates, or if inflation becomes stagflation, like what happens? Who knows? None of us know. I don't know. I'm not a prognosticator, but I feel like there's enough risk there that I'm going to go with short-term low, maybe over the next 6 months. Who knows?
Yeah.
So side note, that's actually what he said. He said bottoms in, but his thought, I don't remember who this guy was. I didn't even hear his name, but bottoms in, but we close where we touched yesterday. So end of year we'll be at 5,500. Matt,
that's okay.
Yeah, I just think we're back where we were right before the election in the SPX, and there was it seemed like two major forces driving the upward movement, which was optimism about Trump and economic policies, and then the AI bubble. And, a month ago we had that Bloody Monday when the market was down several percent. A lot of people got blown out on their weekend trades, and it was because some Chinese app that was known. I mean, people had known about the story a week ago. It went to number 1 on the App Store, and people realized, oh, this may actually impact NVIDIA. This may impact Microsoft, Google, all these large American companies that make up a disproportionate amount of the SPX. So that's unwound somewhat. If you look at Mag7 or FANGMAN or whatever acronym you use, that has unwound somewhat, but that's more of a short-term thing. I would think the longer-term effects of economic policies, that can take years. So I'm going to go with, I would agree that I think 5,500, I think 54 to 5,600 is a probably close term churn area for the bottom. But I wouldn't be surprised if we dip down to 5,000 at some point this year for sure.
Yeah,
Again, I'm really bad at this. I'm not a prognosticator at all. I mean, a lot of my back tests and stuff are completely independent of what the market is doing on any sort of time frame like that. They're looking at a lot shorter time frames. So,
well, Troy, can I bring in a Jack Nicholson quote real quick?
Of course.
So, Troy, I like the quote, so I try to bring it into every type of situation, like where you can't handle the truth. And this is pointed at retail traders, that when you think, really the problem here for retail traders is we've gone to, it takes 5 months to go up 600-700 points, right? And to go down 500-600 points, 3 weeks, 3.5. And I think that unnerves people because that causes panic, right? With these big candles down. I mean, it's like when we're ready to go down, we're going down, right? Now, and it took to go up 600-700 points, it took over 5 months. Now, to me at this point, the interesting thing to me is my biggest fear at this point, once we've gone down 500-600 points, it's that rip your face off rally, right? That you can get, some big candles. If we come back, it's not coming back SPX up 12 points, 7 days in a row. And so I think it's, as I go through all this, if I had to vote on, out of the 4 of us, whose opinion I agree with, Rusty, I would fade my opinion, go with Rusty's. I think that seems the most logical. At this point, all we can say is a short-term little bit up, but this could be ended real quick, right? I mean, because sometimes we think, okay, 10% is this number that everybody talks about. Well, why not 20? COVID correction was 30. Why can't we do 20 and then discuss it? Now, I don't know if in 80 in 2020, I'm not sure. Did that get to 20% down before I don't think it just stopped at 10, but I could be 2022.
Oh, the 20.
Oh yeah, 22. We went from about 5,000 to 3,500. So yeah.
Oh, really? Okay,
yeah,
so that wasn't just a
did.
10%.
No,
Yeah.
no, it was like
Okay.
almost
20.
35, I think.
Yeah.
Oh my. Okay.
The other
But even then, the VIX never woke up. To Dan's point, it was a controlled demolition, kind of like the last couple. That's the
controlled
term I like.
demolition.
You think about it. Yeah,
this
it's
feels
very
like 22 more than
You're
COVID crash. I mean,
you're right, because the VIX was 19, kind of 19 to 31-ish in 22. And right now it's staying, I mean, it's very controlled chaos, you know.
Yeah, that's right.
Well, and the argument, just to make the argument that, again, this is not my argument, this is just, to steel man one of the positions here, is that if, Doge has made its way kind of into mainstream culture to where people are actually talking about, for the first time in my adult life, significant rollbacks in U.S. government spending, which is a huge part of the GDP of the U.S., which the U.S. obviously isn't the SPX, but the U.S. obviously is the biggest, is the main driver of the SPX, especially in short-term price action. And if you take this idea that this administration is actually seriously going to take on the spending and try to right size the longer term financial future as far as debt to GDP ratios, deficit spending, etc., then the stock market staying up at 6,000 is not helpful to that. If the stock market drops, if we go down to 5,000, 4,500, that's going to naturally compress the interest rates, and that's going to allow the U.S. to refinance its debt at much lower percentages. So I think I've said that before, but I mean, that's the argument to where, we were joking about Trump not watching the market, but there is an argument that he's watching it, and this time his motivation and his priorities are a little bit different than last time.
Yeah, I mean, listen, if I knew the future, I would still be doing this show. But we would only
be in the penthouse. We'd be in the penthouse.
Talking about it would pancakes versus waffles every day. I mean, it would be painful how much pancakes versus waffles there would be. Anyway, so let's talk. Yesterday we talked about iron condors, and we said today was going to be Iron Condor Friday. So let me show you some stuff and see what you guys think, and then I want Dan to show us what he's cooking over there and what some potentials could be. So. First off, can you share my screen? Troy, talking to myself. Troy has shared his
finally
screen.
Happened.
That's right. So this is the condor that we talked about yesterday. You can go back. I'm not sharing any tests today, just because options involve risks and they're not suitable for all investors. And everything we're talking about is backward looking, not forward looking. Like I said, always you should consult with your financial advisor and. This is for entertainment purposes only and things like that. But anyway, this is that condor, but we've changed a couple things. So yesterday it was a 0-day condor, and we used the exit on the call side, exit on the put side. We exited using price. So if price hit the shorts, we got out. Dan gave us the idea of saying, when I'm trading these things, I don't use price. I use deltas, and so we adjusted it. I also did something a little different in the sense of side note, when people people ask us sometimes, like, do you guys even, do you use your tool? Do you use Option Omega? Like, this isn't every day, but going to go ahead and say I put an 8-hour day into research yesterday, and I can confirm the thing is addictive. It's like one more test. You're just laying in bed like 1 o'clock in the morning, like just one more test. And this is what I came up with last night is I switched it around. So basically the call credit side is 1 delta and the put credit spread is 2 delta. And because I'm doing these separate, it is like a condor, but it's just different day condor. I mean, the shape of the graph is going to look like a condor, but you put it on. And you put it on first thing in the morning at the same time. And I'm just doing one contract for research purposes. We've upped our slippage a little bit and made it a little bit more realistic. Shout out Matt. Matt cares about you guys and always wants to make things realistic. So shout out Matt for doing that. And the main difference is the days to expiration. And the difference is now on the call credit side, remember, if you're selling a call your negative deltas, your short deltas, right? And so if you are selling a 22.5 delta call, you are this is much more complicated than this, but if you're new to options, think of this. If deltas, people throw deltas around and it scares you. That would be like, I shouldn't even say that. I'm just going to say this. It would be like having shorting 22 shares of Apple, 22 shares of a stock. If each share represents a delta, so, now options are not like that because you can expand. There's a lot of risk involved in a way that doesn't do that. But for delta purposes, a delta for every movement, a dollar change. So the delta on this is when you start out at negative 22 deltas, 22.5 deltas, the delta is going to keep getting more negative as it goes up because you're going to need it to go back down to make any money. So if you start out 22, eventually, if it touches the price, you're at a negative 50 delta, right? And so this is adjusting much sooner than that. You're not waiting for price to touch. You're getting out much sooner. And so, guys, what do you think of this? This is ran from the advent of SPX dailies, so 5-day-a-week expirations, till yesterday. Any thoughts about this? Oh, and one more thing, sorry, because Rusty wasn't here yesterday. If you look at this test, each of these tests, what you're doing is you exit. Oh, I took it off. Never mind. Nope, never mind. Forget what I said. We're good. All right. What do you guys think of this?
Well, I would say it's a super interesting idea to test a condor where you're not going gangbusters all or nothing. And that's kind of how you set it up, right? Like this is a much less reward, but also you're getting out sooner, right? Like
yeah,
you're acting sooner. So I think that's a super interesting concept. I'd actually like to play around with this. And
why is the reward less? Can you speak to that? Because it is held to expiry if it doesn't get tested, right? So you're still going to get the full.
Well, I guess I wouldn't say there's less reward. You're just giving it less room to work with. Because
you're cutting your losers shorter.
Right. And you're giving it less time to win too. If you let it go farther, it could come back and win. That's all I'm saying.
I like how it's 1DT on the calls, like you said, just because of the skew, right? To get the credit. Makes a lot of sense to me. I like that. I mean, there's this fundamental part of me that always hates selling calls in any fashion ever. But I get it. I get it why you do it, because markets like the last couple weeks, it smooths out those drawdowns, right? That's what I'm thinking when I see that. I still love selling puts generally, as long as they're in a controlled fashion like this, where you have a known risk and you have a nice smooth exit. I like that it's 30 delta, so it's you're not letting it get super far in the money either way. So there's a lot to like about this. It's just a smoother way to trade, and especially if you can automate this, then it feels, pretty calm. So you're not having to watch the market either.
Troy, could you
like a hawk anyway?
Troy, could you jump into the trade log and look at an example of when it exits so people can kind of see the price?
Yeah, perfect. That's a good setups. So basically, here's a good example. This is a put, right? And this is the put credit spread. So you put it on when price was at 56.37. Because you're doing a 22 delta, your put is far away because of the high VIX environment, right? So you're almost 100 points away. The 22 delta is 100 points away. And you got stopped out when we were about 20. Let's see here. This is actually a funny one. You got above
20 points in the money. You're right.
Yeah, the delta's but you theoretically you'd want it to go. This is a great example of sometimes how delta can skew. Let me look at another example because this is not the best one. This is probably a better one. 56.93. The short put is 55.80. you got out 14 points above that as the delta approached.
Yeah, and that was a small-ish loser.
Yeah. So now
the risk management treats them separately, right?
Yes.
So you get out of the put, but you keep the other side.
Yes, you keep the other side. And so it's a smooth. What it does, to Rusty's point, is it smooths out the trading. Like Dan mentioned yesterday, you can just absolutely get smacked if you let a short put or short call, for instance, get touched before making a change. And so this is a smoother way to do it. Is that what you're doing is you're trading a higher probability for a lower stop loss. Does that make sense?
Yes. I mean,
yeah. Well, yeah. I mean, it's Dan. I think Dan taught me this, so I hope it makes sense.
No.
What I'm saying.
The other thing is, if you scroll down and look at some of those other losers, you can really see how using the delta changes the losers and the exits based on what the VIX is doing. If you scroll down a little bit more, like right there. So you have sometimes where if you look on Monday, March 3rd, we had a giant move, and you just got the one right below that actually was a wrecking ball. You got doorknobbed.
What does the trade replay look on that?
Yeah.
Like that. Just curious. Anytime I see that, I think, oh, trade replay. Interesting. Yeah. So it was bad for a while.
Yeah. And you can see the underlying that graph is showing that there was a pretty significant move, and look at what VIX did. I mean, there was a pretty significant move in VIX too. When that went on, it was about a little bit below 20 and then finished above 23. So you had the perfect storm of Greeks working against you. But the flip side is, if you get out of the trade replay, there's also times you get exited, and I'm using the choice to say exit rather than stopped out because it's a delta exit. And there's sometimes when you get delta exited for a winner. So it's not super common, but depending on, again, the vol environment and what the market is doing. If you look back February 19th, there was an exit on both sides of delta, but they were both pretty small losers. And there's times, if you look at February 25th, you got delta exited to the downside for a small winner. So it's a totally different thing using the position delta. It's really interesting though. And yeah, it does take a totally different understanding of the Greeks.
You're using the delta of the shorts, not the position delta, correct or no?
On this, I think I used position delta to smooth it out even more, but you could definitely do it on a per leg basis.
So when you say 22 delta on your rules there, when you get out of it, each leg, you get out of each leg when the delta of the short or the position deltas?
The position delta, just for this, because the long is so far away that you're not getting much delta out of that. So I didn't mess with the specific legs of it.
I got you.
If you had a tighter spread where that long was influencing delta, you might want to do it. But in this case, all that's doing is smoothing it out even more theoretically, because you're not waiting on that. So, all right, let's keep going. This is
what was the win rate on that one?
Which one? The call credit spread, you won 41% of the time over SPX dailies, but because you are limiting your loss, you're not losing massively. Those stops are kind of not taken out. And then the other one is you win a little bit more, which makes sense in a upwarding trend market. The credit spread. So, all right, we'll keep going. I'm going to show real quick. Actually, let me just show one more, and then I want Dan to show us what he would do with it. So this is a late day credit condor. And so instead of putting this on first thing in the morning, you're doing it at 1:57. And again, with testing, don't don't just assume 157 is the only time you could do it. If your trade only works at 157, go back to the drawing board. That's my answer for that. But and basically what you're doing is instead of targeting deltas, you're targeting credit. And so you're trying to get a $3 put and a $3 call. And then you're buying a really cheap out of the money wing, just as cheap as possible. And you exit. This is the classic one. This is the one we before Dan improved it. This is if you exit when the put's tested goes past. So you're going to go past the put 10 points and past the call 5 points. And basically what you're doing is you're just kind of letting it, this is pretty straightforward. Like you put the credit on, you want to keep as much credit as possible. You get out when you get in trouble. That's kind of the straightforwardness of it.
Can I give the quick history of this one, Troy?
Please.
So if you want to see more content and you're asking a question of like, why is the starting capital $42,289 and why is there 65% allocation? Those questions are all answered in the YouTube video we have, which is SPX versus Bitcoin. And this was a trade that actually came out of the OO community last year on the Discord. Shout out to the OO Discord. And this video compares this trade, which is a volatile, higher risk trade, with Bitcoin, holding Bitcoin, which is a volatile, higher risk asset. And it is a comparison video between one way that you could do options versus Bitcoin. So that's kind of where it came from.
Yeah. So the goal of that was basically just to say, like, I think when we made this video, Bitcoin was at an all-time high. It wasn't, which side note, this is a separate thing. Gold is the new Bitcoin.
Yeah, right.
We'll talk about that next
week. Right.
So the goal of this was to say, listen, you can actually, Bitcoin's had this crazy move. People are like, you got to get into crypto, bro. Hey, lad, you got to get into the Bitcoin. And what we were trying to say with it is you could actually be much more conservative with options and outperform crypto. Like options provide a lot more, just doing SPX stuff, S&P 500 stuff. So anyway, it's this certainly, I don't think any of us trade this type of trade, but we also are in the minority because I think a ton of people trade these type of trades. So
That's right.
Dan, you have any thoughts about this one? Collecting credit versus deltas.
Pardon me?
Collecting credit versus deltas,
Yeah, I like the study a lot. I think like any trade, you get used to it, right? I think, like Troy was talking beforehand, butterflies and these type of spreads with a better risk reward ratio feel better in your heart. These credits where the risk reward is stinky, sometimes we have trouble with them. But I think there's flexibility when you look at, and I'll show in a second, but when you look at an iron condor, if you don't like the risk reward, sell higher deltas, right?
Yeah.
If you're selling a 10 delta call and put and you say, I can make 130 to lose 900. If that bothers you, go more towards an iron butterfly. Sell a 20 delta call and 20 delta put. You'll get a little warm and fuzzy because you'll get a better risk reward, but your probabilities go down. Both can win effectively. I think it's more of a, wouldn't you agree? Yeah, personality. What are you comfortable with? And that's why I think people are more comfortable with butterflies because, again, you could lose just as much in a butterfly as you can in an iron condor if if your risk management is sitting on your hands.
Sure.
Right? You could get beat up pretty good. But I think the iron condor, there's a bad risk. There's the pendulum, right? Higher probability, stinky risk reward. Lower probability, better risk reward. It's really a gut check. What are you comfortable with? And both can win if you have a decent risk management plan.
I agree completely. we should let Dan, because we got 10 minutes before market open. So let's let Dan.
I can give a quick.
Yeah, give us some toss wisdom if it's all right.
I don't know if it's wisdom, but it's a couple things maybe to point out. Can you see my screen?
Yep.
All right, yeah, just two quick flavors. I just want a couple points here. Now, again, the graphs look a little willy because it's before the opening. Yeah, because it's before the opening prices a little bit. But what I want to point out is just, okay, with the VIX in this 24 and up area, and we'll just look at 55.20, what has the experience been for a 0-day iron condor lately? And the experience has been, okay, bedlam is going on in River City. And so the market is saying, look, if you want to trade the iron condor, and this is around a 10 or 12 delta call for each strike, roughly, we'll make it worth your while. In other words, here, the difference between the short put and the short call is like 230 points. So with the VIX 22, 23, 24, you're getting that 200 plus distance between the short call and put. Now, does that feel totally comfortable when the candles are 100 points every day, the last 2-3? No, but these have been working pretty effectively. This doesn't fully the credit. You're getting somewhere around $1.30. At least I've seen with some of these as folk in the community have been doing these. And so that's a different feel. And you get, and they have been working pretty well, even with this volatility, a little bit of timing, right, on it. But you can see, look at the gamma. The gamma is just saying, how do your deltas change if we go up and down 2%? And the answer is very fast. Like if you live in the north, sledding hills. This is a steep sledding hill. Whereas if you go to a totally different trade, which is fine, here's a 28-day iron condor. And very similar. I'll just make two quick points here. Here's a 28-day iron condor, and what do you notice? At Thinkorswim, they're barely recording a gamma. What does that mean? It just means as your delta, as your price goes up or down 2%, your deltas don't move. And if your deltas don't move, today, you ain't losing much money, right?
Yeah.
If this thing goes against you. Now, your theta is like, really?
I mean,
if you go from go ahead.
I was just gonna say, I don't think I can see your cumulative Greeks.
Oh, you don't see here, let me show. Do you see this number?
I just see.
Like in the price slices here, I'm annotating. Do you see that?
No. We're not seeing the annotation.
Oh, you're not? Okay.
No.
Okay. I'm having a good time here moving the annotation.
I felt like I was missing out on the annotations. Yeah. No, we'll talk.
Sorry.
No, you're fine.
Do you see in that middle row where it says 55.21 under price slices? Do you see that?
Boys, do you see that? I'm having trouble
I see
seeing.
it.
Okay, perfect.
So 55.21, that middle line as you go to the right, we're under delta in the middle. There's your delta is close to zero, minus 0.19. The gamma on Thinkorswim, they don't even record it, right? It should be a little bit, but it's very low, zero at this point. And that just means that you can see as SPX goes up or down 2%, which if you look at minus 0.19 is the delta in the middle, look above it, that's the delta up 2%. You look below it, that's the delta down 2%. It doesn't move, right? And so, but the only point I was going to make, and I'll get the the chart better in future shows. But the thing is, you can move these deltas real quick. Can you see my screen now? So if can you see this? All right. So if you go out to April, I'm doing this April 28, and we'll just do the put side. Again, here's the flexibility. If you'd like a little more credit and a better risk reward because the market's going crazy, you can see I chose the short strike of 52.30 for my short strike. and I chose that on a delta of. Can you see me? Can you see my cursor?
Yeah.
Okay, so my
Yeah,
cursor is
that's
in
good.
19 delta. So I picked a short strike of 19 delta for the puts, 52.30, and then on the calls, I picked my short strike of 59.10 based at 12 delta. So I would call this more of an equidistant iron condor. It'll be a little bit closer to delta neutral, higher delta put, lower delta call. If I was a little more bearish, hey, I wanted more room to the downside, I would do a same delta iron condor. 12 delta call, 12 delta put, 15 delta call, 15 delta put. But if you're someone who says, you know what, these iron condors are for the birds, unless I can get a better risk reward and a higher credit, you can do it. You know, just go to we'll just do a quick example. If you go to the puts and you say, look it, I'm going to sell a 25 delta put. So instead of selling a 52.30 put, I'm going to sell a 53.90 put, right? I'm going to sell a 53.90 put and then buy a 53.80 put. Right? So you're going to get what you want, a higher credit. And then if I do a 25 delta in the puts, maybe I would do, a 15 delta in the calls. So if I go down here, 58.70, go down a bit, 58.70, 58.80, I'll just be 1 second here. So 58.70, 58.80, 53.90, 53.80. Now, I don't know if this is the early morning that it gives me this $27 debit here. I think this is just before the opening because it looks like it did. But the point is, you can get a better risk reward and a better credit. So I think it's not that the iron condor isn't attractive. It's how do you dress it up, right? If you move it, you have the iron butterfly here, the iron condor here. Move your iron condor to look closer like an iron butterfly, and you can be happy. So somewhere along the pendulum, everybody can have their whatever they're
gin.
Looking for. They can have everybody can get their gin along the pendulum. So
yeah, perfect. Guys, we went up against it. Hopefully that was helpful for some people. We've got some fun stuff coming up in the next coming weeks. We're going to have some butterfly week. We're going to have some hedging week. We're going to have a lot of different things coming up. So appreciate you guys being on with us. Enjoy your trading day, and we will see you next week.
Happy Friday.
Have a good one.
Happy Friday.